Welcome back to But This Time It's Different, the show where we unpack financial absurdity, geopolitical tantrums, and why your or my alma mater just tried to sell a busted VC fund bundled with a failing Chilean irrigation startup. My name is Sinead. I'm a defense economist, investor, and someone who thought endowments were boring until they became distressed sellers on the secondary market.
I'm Alex, a finance and technology writer, and someone who's increasingly convinced that Harvard is just a private equity firm with Gothic architecture.
You're not totally wrong, but let's rewind first. So, story. Once upon a time, I seriously do mean once, universities were these magical places that educated people. Oh my God, you showed up, you read books, argued about Marxism or mitochondria, and if you were lucky, left knowing how to write a sentence or two diagnosing diseases. Then the 80s happened. Reagan deregulated half of the economy, capital got ultra sexy, and these kind of elite universities looked around and said, hey, wait a second, why are we wasting time with tuition when we could just be rich instead? And then they pivoted, not super quietly, but somewhat strategically. And they began transforming their endowments into these massive financial weapons of compounding destruction. This wasn't about stability anymore. It was about pure alpha generation. And the playbook actually came from Yale itself.
A lot of it is down to this guy called David Swensen, who was Yale's chief investment officer from 1980s through to his death a few years ago. And Swensen took a look at, the classic 60-40 stock bond portfolio and said, yeah, fuck that. That's for cowards. So he invented the Yale model, which is an endowment strategy that just cannot get enough of illiquidity. So under his stewardship, Yale's endowment made massive allocations to venture capital, to private equity, hedge funds, trees, Brazilian soy farms, basically anything else that it's really, really difficult to price daily. And to be fair to him, this wasn't insanity. It worked really well. Between 1985 and 2020, Yale's endowment jumped from $1 billion to over $30 billion, posting returns north of 12% annually. I mean, most hedge fund managers would kill quite a large number of family members to achieve returns like that. So yeah, that is not just beating inflation, that is dancing on it.
How extraordinary. So naturally, the rest of the Ivy Leagues look at this and say, well, fuck, we got to get involved in this too, and copied it like it was a take-home exam. Harvard built its own internal asset manager and became the largest endowment in the world. Guess how much?
I have no idea. I know 30 billion, 40 billion.
53 billion by 2021. At one point, Harvard owned 10% of all sustainably harvested timberland in the world. And they didn't just buy the forest, they collateralized it. They have owned farmland in Romania. They owned irrigation rights in Chile, vineyard in Napa. Because when I think, student access to opportunity, also simultaneously think global agribusiness.
Not everyone went big. So Princeton, I believe, took the kind of boutique route, so smaller, tighter, but also very rich per capita. So Princeton makes $4.5 million per enrolled student just from endowment returns, which, in the UK, you'd have vice chancellors' eyes out on stalks if you gave them those kinds of numbers. Brown got into crypto, bizarrely. Dartmouth did commodities, and Stanford went very, very hard into venture. And to be fair to them, so if you talk to people in VC who've raised from US university endowments, they tend to be really complimentary about them as LPs, because through the 80s, 90s, noughties, these university endowments have basically put the most storied firms in the history of venture into business, and result, they have really good networks, know what a successful fund looks like. Getting money off them, you have to clear a really high bar, but apparently once you do, it's worth it.
Far from Sand Hill Road is New York City and Columbia, and their endowment, now slightly less than Harvard's, but still a whopping $15 billion. Except unlike Yale and Princeton, Columbia didn't just go alternative. It went totally off script. Since 2016, Columbia's endowment has managed insanely to underperform the S&P 500 every single year. So this isn't just like one-off bad investment, but over 7 years, they have lagged the benchmark so badly, you'd think they were shorting their own reputation.
And the kicker is, bizarrely, they seem to think it's fine. And as far as I can tell, they haven't actually changed course. And their public equity allocation is 14.5%. The rest is private equity, hedge funds, and real assets that haven't been disclosed, but are probably the kinds of vehicles where you need an NDA just to get the prospectus. And to be honest, if they just invested in a broad-based index fund, they'd have performed significantly better, and they wouldn't have had to fork out so much money in fees.
Yeah, so universities now look like universities, and they kind of still sound like universities, but they act like hedge funds with some sort of Latin motto across the door. And the worst part is that they believed their own myth, that they were the smartest allocators in the room, that illiquidity was discipline, and that patient capital was immunity from consequence. And then, the music stopped and they got left standing with a fuck ton of assets whose prices were depreciating like there's no tomorrow and no way of offloading them.
So yeah, you need to go back to 2022 when Jerome Powell turned off the money printer, valuations began to crater, the cheap money era finally keeled over for, well, a little bit. Obviously, it came back later, but we didn't know it was going to happen in 2022. So interest rates spiked, private market valuations flatlined, and all those illiquid assets suddenly looked suspiciously like liabilities. And yeah, when rates go up, discounted future cash flows become comedy, capital calls come in, distributions are gone, the marked model, that you didn't really believe, but you at least pretended to believe, begin to scare you slightly. And endowments who built this entire financial ecosystem on the kind of Reddit bro assumption that stocks only go up, so to speak, suddenly start looking a lot less smart.
Yeah, Colombia was hit pretty hard by this not being so smart thing. So, despite sitting on its nearly $15 billion, their investment office somehow produced negative returns. And it's really fucking bad when you're running a $6 billion a year operation and still kind of wondering, do we have enough money to pay the adjunct professors? So, Alex, what do? They panic sell. And suddenly, and this is not just Colombia, but all of the IBs, they're on the secondary markets trying to offload their shitty VC and their PE stakes like it's a goddamn yard sale.
And the challenge is nobody's buying because
Yeah.
everyone has too much venture exposure already. Nobody wants your Series D stake in a telehealth platform with 12 months of runway. So you have to bundle, if you want to buy their stake in Blackstone, you also have to take the pre-seed vegan AI meatball startup that Web3 enabled with an interesting fintech play.
Yeah, no, this is not portfolio management as anyone should be doing it. This is quite literally liquidation theater. So you've got these like multi-billion-dollar institutions behaving like tech bros in cap tables gone bad. And Colombia, well, they're texting every broker in New York at 2 a.m. being like, hey, you want to buy some climate agri-tech exposure? Comes with a tote bag. And they're like, nah, man, fuck that.
Well, yeah. And this is where so much diversification is just sort of bullshit, is that private equity, hedge funds, real assets, like you can claim that that's diversification. That just means you're illiquid in a bunch of different ways. And suddenly these uncorrelated asset classes are in fact not entirely uncorrelated.
All of these correlated but not correlated illiquid assets, this has consequences, because what happens when you cannot liquidate? You cut across the academic side of your university, because these are not just hedge funds, they're operational universities. And this looks like faculty hiring freezes and deferred maintenance, art programs on life support. Meanwhile, students are asking why the campus gym closes at 5 p.m. and why the gender studies department is now just one guy and a printer.
And yes, this is the bitter irony, is the whole Yale model thing was supposed to be anti-fragile. But yeah, it turns out that anti-fragile just means unpriceable and unsellable.
So what do we call this, Alex? I mean, it's not quite a crash, but every day we're reading news stories about universities not being able to get rid of their massive private equity portfolios. It's certainly some sort of a reckoning, this kind of slow, humiliating return to gravity for these massive institutions that thought compound interest exempted them from history. And now they look around and the yield has gone. This investment model is beyond broken, and unfortunately, and these are my alma maters, so I should probably sound less excited about this, but the most prestigious schools in the world are trying to unload dead assets before the next alumni gala.
Yes, Sinead, you clearly have beef with US academic institutions, but we don't have
No.
to go there. But yeah, just as things are going far from swimmingly, we have another confounding factor. So enter Donald Trump. And well, there are these things going on in the US at the moment. Probably noticed them. They're called the culture wars, which we don't normally talk about on this podcast because we're not angry enough. But if you are a culture warrior, US universities are the perfect target. You've got campuses full of diversity statements, land acknowledgements, gender neutral bathrooms, DEI task forces chaired by former Bain consultants. We're not saying any of these things are either good or bad. Please don't cancel us. Considering how many listeners we have, it'd make no difference if you did. But yeah, Trump's playbook is simple. Identify the institution with the most prestige, the weakened spine, the largest unrealized capital gains or losses, and then attack it from both ends. So first you do it rhetorically. You call them corrupt, overfunded, ideological monopolies run by terrible guys, say they've lost their way, that they hate America. And then you can get out the policy toolkit and, shockingly for the people on the center left, actually do something.
Yeah, that's something that you're talking about, Alex, is starting to really hurt. Harvard lost $2.7 billion in federal research grants, just gone. I don't want to say Doge, but Doge. So no due process, no kind of long email thread, no time to panic and forward to legal, just gone overnight. Columbia, MIT, Dartmouth, Yale, they're sitting there and shitting themselves, watching this happen in real time, and they know they are next. Columbia pulls in over $1.2 billion in federal research money annually, not to mention Pell grants, NIH grants, DOE funding, that's Department of Education funding, and whatever alphabet soup is still funding their med school. And that is real money. I mean, this is not the hedge fund money we're talking about now. Like, this is actually real money. And suddenly it's politically radioactive.
Yeah, it's interesting that the change you've seen is that obviously anti-Israel protests have been a feature of a lot of US campuses over the last year or so. And last year, US universities let them basically just run for quite a long time uninterrupted. This time round, I think Columbia had one where students were asking them to divest from ETFs that track Israeli-linked companies, usual kind of thing. But instead of letting it run, they called the police in to dismantle it, which was a bit of a change of tack from US universities. I think this is the vibe shift that has been, frequently discussed since the start of this year. And yeah, I think Columbia wasn't scared of the students or scared of the protest. They were scared of how it was going to look to the new sheriff in town.
They certainly weren't scared of the students. They kind of threw them under the bus and said, gone. But here's the real thing. With this new sheriff in town, Trump, and they are actually scared of what's happening now, because what's happening next is this fiscal policy hammer called the endowment taxation. And Trump's team is now proposing to hike the endowment tax rate from 1.4%, which, oh my God, is nothing for a hedge fund to get taxed at, to a whopping 21%, which, I mean, let's pause here for a minute, is the corporate tax rate. So now Harvard, Yale, Columbia might have to pay taxes just like Google. Because when you buy up farmland in Africa and water rights in Chile, at some point the IRS stops seeing a school and starts seeing a holding company.
And amidst all of this meltdown and these protests, like, Columbia has lost millions of dollars in donations. Now, obviously, these sort of losses in donations are a drop in the ocean when you compare it to the amount of money they've lost through bad investment decisions. But at the end of the day, loss of narrative control matters much more to them, because when they lose that reputation for being a serious and trusted institution, it's like when ultimately they become politically vulnerable. And universities' financial decision making is politically vulnerable you know, in more than just one way, isn't it, Sinead?
Yeah, they are smack bang in the middle of this kind of global financial system. And that means when someone like Trump rolls out a macro shock disguised as patriotism, like the new Liberation Day tariffs, institutions like Columbia get fucked because these aren't just schools anymore. Remember, they're not even just hedge funds. These are geopolitical actors with exposure to everything from private credit in Southeast Asia to toll roads in emerging markets. And the tariffs, yeah, these tariffs are hitting these hedge funds, sorry, I mean university portfolios pretty damn hard.
You're exactly right. And as a student, you wouldn't instinctively think that Liberation Day, whether or not it's been postponed or reenacted or postponed again, should affect you. But obviously, a lot of your university's money is tied up in alternatives that are intimately connected to international cash flow. Things like global infrastructure, real estate funds, venture vehicles tied to Southeast Asian tech or EU renewables. And like, tariffs hit all of those up and down the board. And if you're a university, you are now being hit from every angle. You can't raise tuition again in this political climate unless you want to be publicly accused of the White House of like ripping off ordinary Americans. You can't cut faculty without a mutiny. You can't sell your stakes in VC firms because no one wants them. And now you're sat on dollar-denominated exposure to assets in countries that are living under this US economic warfare sword of Damocles.
Yeah, and Alex, I want to be really clear here. Colombia is not the only one that is in this situation.
It's good. We've been hating on them quite a lot for this episode, and it feels mean.
Yeah. No, time to hate on Harvard and Yale and other places too. So all of the major endowments kind of bought into this illusion of decoupling, and they said that, you know, globally diversified meant geopolitically immune. I mean, I suppose they didn't ever think that they would be immune from geopolitical risk coming from their own country, but they did believe that if they spread risk across all these different asset classes and continents, they'd be immune from short-term shocks. Except the world has changed and geopolitics is now finance. And like you said, there's an angry president with a tariff fetish that is tanking their IRR with every single press release that he makes. So universities are these insanely leveraged global investors with zero ability to respond to shocks. And that's not even the absurd part. The absurd part is that they still claim to be neutral. They say that they're neutral in politics, they're neutral in conflict, they're neutral in capital, which is so laughable, but their endowment is making bets every single day, whether they acknowledge it or not. And, you know, maybe the student protests were onto something here.
But I mean, and while all of this is happening, alumni get the emails from Columbia, Yale, Stanford saying, we're facing hard choices. Help us to preserve academic excellence. Support the next generation of leaders, which, as far as I can tell, just means supporting degenerate gamblers who are leveraged up to the eyeballs.
You know, Alex, every year I get multiple emails from Harvard asking me to donate money. And I'm like, oh my God, I gave you hundreds of thousands of dollars, which you succinctly put into a hedge fund that probably lost a lot of that money. And you want me to bail you out again? I don't understand. I guess this is a very big cultural difference between Europeans and Americans. But when you walk around Harvard, I mean, Harvard Business School especially, the art on the walls, the sculptures in the garden, I mean, entire goddamn buildings donated by people as if this hedge fund was poor.
Yeah, I mean, it's you compare it to UK universities, and most of them do not have endowments of any size. And historically, they used to entirely rely on public money. And this got pulled, and government was like, you really need to create endowments. And most of them, like, you get these top tier UK universities, and they have smaller endowments than mid-ranking universities in Australia and New Zealand. And instead of that, they just seem to spend most of their time trying to like bleed money out of spin outs. Although the worst university for this is Oxford, which ironically does actually have a really big endowment and, you know, donations and buildings named after people who've done some things we shouldn't talk about.
But here's the thing, right? On the donation aspect, I can totally understand why you would donate in the US, because it's a pretty well-known thing that different tranches of donations get you specific asks and requests. And I was with a bunch of people a couple of years ago, and these are openly discussed numbers. How much you donate to get your kid into Harvard. This is a well-known number. How much you donate to get your name on a building, which will give you massive geopolitical and other kudos. So this is a business model in and of itself. In the UK, you cannot simply buy your way into Oxford or Cambridge in the same way that you can Harvard or Yale or Dartmouth. At least I don't think so. But there are certainly there's more than two ways to get into these Ivies, but one of them, at least very importantly, is buying your way in. And for the record, I believe the number is 10 million.
Okay,
or at least it was in 2016.
That's good to know. I mean, when I graduated from Oxford, I was given a mug and a direct debit form on the day of my graduation ceremony. As far as I could tell, donating my old college gets you invited to periodic drinks receptions, and if you donate enough money, you get the misfortune of being invited to dinner with the provost. I remember there was this moment a few years ago where a different Oxford college, this heiress to a Thai airliner, wanted to give them tens of millions of dollars to rename the college after her. And it was quite a small college, so the money would have been life-changing for them. The government actually intervened to prevent this from happening, which is, again, something that I just don't think Americans would dream of doing.
No, definitely not. And when I graduated, we were asked to sign a giving clause, which asked us for 1% of our salary for the rest of our lives to go to this hedge fund. And I kind of looked around the room and saw everyone like whipping out their pen and hurriedly signing this thing and thought, like, am I the crazy one or is it them? Like, it was just so insane.
I've never felt the need to pay a tithe to my former university. They got these things off me called fees, which I paid in exchange for my education, and I don't feel like I owe them a lifelong debt of gratitude.
Agree. So here we are, the most powerful universities in the world, clearly with billion-dollar portfolios and way too large private equity exposure and forests on every goddamn continent, going back to the markets. They're begging the secondary market for bids, not for capital, but for credibility, because they cannot offload the shit they spent the last 10 years investing in.
Yeah, the old formula of invest like a hedge fund, brand like a monastery, and never show anyone the spreadsheet has broken down. Like, the numbers are bad and the aura is gone. Sad times.
So the question now isn't, will they survive? I mean, it's Harvard, it's Yale. Like, they will, of course they will. They're too rich not to. But something else is dying. And it is the idea that these institutions are above the fray. You know, above volatility, above politics, and above market forces. They're clearly not. They are in the churn. And this week and last week and probably next week too, it seems like these universities are on sale.
And on that cheery note, thanks so much for listening to But This Time It's Different, and we'll catch you next time. And if you would like to buy a stake in our seed round, drop us a line.
Yeah, and also, can I just say that I didn't mean any of what I said in case I have kids in the future that I want to get into Harvard. So take everything above this line with a pinch of salt. Bye.
Bye.